Hi guys, hope you guys are good and welcome back to today's video where we'll be doing a weekly outlook video, right? We will be starting on the DXY, then we'll move over to GBPUSD to get an understanding of what we can anticipate in this week's worth of trading, right? So if you happen to find the information shared in today's video valuable, I'd appreciate it for you guys on YouTube to subscribe to my YouTube channel, and I'd also appreciate it if you follow me on my TradingView profile as well. And the reason for that is because I do drop my daily analysis in terms of what I'm anticipating on that specific day, right? But with that being said, let's get into it. So we'll be starting on the DXY, all right? This is the daily time frame. And if you do want an extensive analysis on the DXY, I will attach a link to a video where I did a higher time frame narrative all the way down into our lower time frames just on the DXY as well as GBPUSD, right? But to give you guys a bit of context, we do understand that for these past few weeks, in terms of institutional order flow, the DXY has been bullish, right? And just to give you more context, we understand that eventually we reached into this daily bearish order block, and that resulted in this retracement over here, right? So this is where we are in current price action. We do understand that this is the most recent low and that's the most recent high, right? So we'll just place our premium and discount tool on that. And just to break down this price action, we understand that for about 2 weeks, we were stuck in premium prices, right? And we then saw a move after we took those buy stops over there. We saw a move into the discount prices where we started to partially fill this daily time frame fair value gap. That resulted in a move towards premium prices again, where we respected this daily bearish order block over here, and then from the premium prices, we saw a heavy move towards the downside into deeper discount prices, right? And that resulted in us having to fill this daily time frame fair value gap, all right? That also resulted in us having to reach into this discount bullish order block over here. And we understand that it also tapped into this daily time frame breaker, which is regarded as you know, a strong support institutional zone, right? And so we understand we have all of these discount PDRAs over here lining up with each other, and that constitutes for a very strong support zone, right, in this discount price. So we understand that we are at a point of fair value where we are in discount prices, and it only makes sense for us to be looking for opportunities to push towards the upside, right? We also see that in the move towards the downside, price took these sell stops over here, which is regarded as external range liquidity. So we understand that the way the market moves is after price has taken external range liquidity, price will then draw towards internal range liquidity, which is regarded as fair value gaps, right? As well as order blocks, right? So we understand that price is in the pursuit of internal range liquidity, and the question is, which one is it going to respect? Are we going to be looking to respect this fair value gap, or are we anticipating price to continue further towards this bearish order block, right? And for me personally, at the moment, I'm anticipating price to continue higher as to reach into this bearish order block. I'll give you more evidence on why I'm seeing that once we reach into the H4 time frame. There's also a likelihood, because of the fact that we can see that the daily time frame in terms of institutional order flow is completely bullish. There's still a likelihood for price to continue higher as to reach into premium prices where we take these premium buy stops and then eventually reach into these relatively equal highs, in which we understand that there's a large amount of liquidity all the way up there, right? But in terms of this week's worth of trading on the DXY, what I am seeing is, a draw towards this daily bearish order block. And once price reaches into that, I'll just wait things out until I get more confirmations as to see whether we're going to be continuing towards the upside or getting, a bit of evidence that price is looking to push lower, right? So in terms of my weekly outlook on the DXY, I'm anticipating price to reach into this daily bearish order block. All right, with that being said, let's go on to our H4 time frame. Okay, cool. Now that we're on the H4 time frame, all right, I'll be speaking on why exactly I'm seeing a draw towards that daily time frame bearish order block. All right. Now the reason why I'm seeing that draw over there is because of the fact that price during this last push towards the downside delivered inefficiently, right? And we understand that the way price moves is it's always trying to move efficiently. So the moment there's only one-sided delivery in price action, price will always look to fill that, just like it does with a gap, right? So you'll understand that this was the last point. Price was moving efficiently, then you got rapid movement towards the downside, and then a bit of efficient price action over here. The difference between that bearish order, that bearish order block over there, and this last efficient price action over here is results in that liquidity void. And the same thing happened over here. We had one-sided delivery towards the downside, right? And then the moment price started trading towards the upside, we started to fill that inefficiency. So we still have this inefficiency left and that one over there. So hence that's why in this week's worth of trading, I'm looking for that draw towards the upside. And I did speak on this on the video that I made last week Friday, that I'm seeing a draw towards this H4 bearish order block, right? But also most importantly that daily time frame bearish order block as well, right? But we can see that in current price action, what has happened is price over here has tapped into this bullish order block, and we're looking to respect that as we anticipate price to continue towards premium prices, right? Towards those premium PDRAs, as we can see over here, that everything that's resulting from that leg to that point over there is in premium prices, right? So let's look at the H1 time frame. Okay, cool. So what we've come to realize on the 1 hour time frame is that price has been giving us an indication that it's wanting to go towards the upside, right? So we understand that's our recent low over there, and price has now given us this recent high over here, right? We understand that overall we are in a discount price, right? And we understand that at this point over here, price pushed all the way into discount prices as to take out discount sell stops. So we understand that these points over here are areas where smart money will capitalize, looking to continue price towards the upside. They're looking to buy in a discount of a discount in order to take profits where? In a premium, right? So we understand what is resting at premium prices is that liquidity void. And now we see on the H1 time frame, what we have in premium prices as well is premium buy stop. So that's what I'm looking, right? I'm looking to target in terms of the DXY, not to say that I trade the DXY, but that's just giving me confluence that price is going to be, pushing towards the upside, right? As to reach into our bearish order blocks, right? As to fill those inefficiencies. So there is still a likelihood that price may continue a bit lower as to take out these lows over here, right? But what I'm confident in at the moment is having to see price respect this bullish order block, and then therefore having to see a continuation towards the upside as to reach these buy stops and then eventually into those bearish order blocks over there, right? So we understand that the dollar is bullish, right? So let's look into what we will be anticipating on GBPUSD. Okay, cool. Now that we are on GBPUSD, this is the daily time frame, of course. To give you guys a bit of context, we understand that, at some point GBPUSD was pushing towards the downside, resulting in price having to take these sell stops out, and then price also having to fill this monthly fair value gap, right? So about 3-4 weeks ago, right, when price was still here, I spoke through how we'd want to then see price draw further towards the upside as to fill this daily time frame fair value gap over there. And there was also a weekly order block that was aligned to that. Eventually, we saw price fill all of that. And then my anticipation over here was to see price continue towards the downside because my overall trend on GBPUSD is bearish, right? But instead, we see how price moved from a premium, right, back into a discount where it took these discount sell stops over here. It also respected this institutional support zone, regarded as a breaker, right? So off of this point, we then started to see heavy volatility towards the upside that completely filled that fair value gap over there, and price continued even higher as to take out the external range liquidity over there, right? The external range liquidity of this daily time frames high over here, right? And then from that point, last week I spoke through how there's still a likelihood that we may take these buy stops out, and that would be regarded as a false break of structure, a turtle soup condition, where we then want to see price push, give us a false break of structure and then continue the move towards the downside, right? But in this week's price action, right, we want to be very critical in terms of our expectations because there's still a likelihood that price may continue towards the upside. So what is my anticipation on GBPUSD? So we understand we've taken those buy stops, right? We've also filled completely this weekly fair value gap as of today's trading, all right? So once we've taken external range liquidity, what do we anticipate price to do? Draw towards internal range, right? It took external, I meant to say, right? External range liquidity. We want to see price then draw towards internal range liquidity, right? Areas such as what? Fair value gaps, as well as order blocks, right? So at the moment, I'm seeing price having to draw into this fair value gap over here, right? This is currently my drawn liquidity on GBPUSD on the daily time frame. So my expectations aren't very, broad, right? In a situation like this where there are multiple confluences that are giving you, various ideas and all of those sorts of things, look at the most, you know, you want to lower your expectations, right? And you don't want to have grand expectations and all of those sorts of things. Look into, what is very plausible. And at the moment, this daily time frame fair value gap is very plausible for me, including this this bullish order block over here, due to the fact that we do have a liquidity void, right? So there's a likelihood that we'll be just, in terms of GBPUSD, we'll just be dealing with these inefficiencies, right? But with that being said, let's go on to our H4 time frame. Okay, cool. So this is our H4 time frame. We understand that the H4 has been completely bullish in terms of institutional order flow, right? This is that inefficiency that we would like to see price draw into in this week's worth of trading, that daily time frame fair value gap. And we understand that, we've been trending towards the upside. As price has taken out external range liquidity, we see price draw in towards internal range liquidity, right? As to fill that, and then we see price draw as to reach into external range liquidity, right? And from external range liquidity, we'd like to see price do the opposite. But we understand what has happened now is price has completely filled that monthly fair value gap as of today, right? We are anticipating that price should continue now or should give us a reversal, or price is likely going to be giving us a reversal due to the fact that on the daily time frame we understand that this point over here is those buy stops, those external range buy stops, right? So from that we then want to see price draw towards internal range liquidity, I meant to say, right? So what is the evidence for that? What can what can give us the understanding that we should be looking for a draw towards, this daily time frame fair value gap. So with that being said, let's go on to the H1 time frame. Okay, cool. So we are on the H1 time frame. All right. We do understand that we're at a very critical point in terms of price action where we'd most likely be anticipating a reversal to occur, right? And that's what we are going to be looking for, right? Evidence for that. All right. So with that being said, look at how interesting this sort of price action is right here. The reason why this is interesting is because price is at a premium, right? We've just taken out buy stops over here, and what happens is price consolidates for, roughly, you know, the whole of today's trading. And the reason for that is because at times smart money will engineer liquidity, especially when they're looking to, you know, get a reversal into play. They'll engineer liquidity by using retail patterns. In this instance, they used a resistance zone, right? They'll use this so that retail traders will constantly be looking to sell this as it touches this resistance zone, and them having to trade that engineers liquidity in terms of buy stops. So eventually, what you'll see is, if the intended direction is towards the downside, what you'll see is a move or a third leg will manipulate all of that, right? And all of that liquidity will be used as willing buyers for them to enter their sell against, right? So that's interesting, and that's also you know one of a powerful form of confluence that you can use, right? Because we understand that at this point, smart money has now order paired against these buy stops. And what are we going to be looking for here? To sell against these buy stops, right? As to push the market lower. So in terms of the H1 time frame, that's what I'm looking at. That's my first form of confluence, right? And now, most importantly, the second form of confluence is this. We analyzed the DXY. This is DXY, by the way. And we understand that on the DXY, we are at a point where somewhere around here, there's an order block, right? And I spoke through this early on, how I was saying that price over here had taken out these discount sell stops. And then from this point, I'd like to see price continue towards the upside, right? And then I mentioned there is a likelihood of having to see price continue lower to take out, you know, these sell stops over here, but at the moment I'm not seeing that. All right, I'm seeing this bullish order block hold and having to see price continue towards the upside. Now, what is interesting is, if we are seeing that the DXY is continuing towards the upside, and we come on to GBPUSD and we're getting an indication that price is willing to continue towards the downside, automatically this becomes more confluence. All right, but we're going to take that a step further. We're going to look at this high over here, right? And then that high over there. Now, the concept that I'm going to be going into is called smart money. It's called smart money technique, smart money divergence, right? Where we'll be using the DXY against GBPUSD. I will attach a link to that, all right? High probability trading environment, right? I think it's that video. And this tool allows you to get an understanding of what is a high probability trading environment and what isn't, right? So what you want to note is a form of, you want to see if there's divergence between these two. So we understand that price made a higher high over here, then made a higher low, and then made a higher high, right? Picture this as a mirror. So you want to see the exact opposite of that. In this instance, right, over here, price made a low, right? And then price makes this high. And then, however, in this instance, price pushed higher as to take out that high, whereas here, this low didn't continue lower as to take out that low over there, right? If this had occurred, this would have been a symmetrical market condition. However, that did not occur, meaning this is a non-symmetrical market condition. What does that mean? A non-symmetrical market condition implies anticipate a reversal to occur, right? So we're anticipating a reversal on GBPUSD. So that adds more confluence to those ideas that we're looking forward to, right? So me personally, I do not trade the afternoon session. I only trade London session and New York session. So during London session tomorrow, I'll be looking for an idea to continue the market lower, right? And here we're anticipating a reversal towards the downside, and we analyze the DXY as well. And what are we seeing? We're anticipating a reversal as well towards the upside. So all of the confluence is coming together, right? And that's exactly why I am looking to continue the market lower in this week's worth of trading as to reach all the way down there, right? And once prices reach there, I'll just wait it out and see if we're going to be continuing towards the downside. And yeah, and just to run through this idea, I did post this early on in today's trading. I did mention that I'll be looking at 2 points, right? Either I did take a sell over here, I did take a L with my SL over there, and then in tomorrow's trading, I'll be looking for that sell towards the downside. But with that being said, kind regards. the architect.